UAP plans to list by introduction in the Nairobi Securities Exchange as opposed to an initial public offering, which of course would also help the company to raise some capital. Why did the firm choose to go the introduction way as opposed to the IPO way?
Maybe just to take you back, we did a public offer end of 2012, which opened in 2013. And the intention of that public offer was to raise the shareholder base of UAP from 25 to currently 950. So we managed to raise $9 million, and the offer was subscribed by 130%. So it was oversubscribed. Now, as part of that process, the intention was to list. By the time we didn't do an IPO, because an IPO means you're raising money from the public and also you're listing. Because we've already raised money from the public, as it were, the plan then was to list through an introduction. I think from an equity perspective, we are fully funded, and what we'll be seeking from time to time is to go to the capital markets to get debt financing for some of the projects which we have. So the plan is to list by introduction, and the plan is to list by introduction in 2015, hopefully in the second half of 2015, so we can achieve the overall strategy of being a public company that is fully listed on the main board of the Nairobi Securities Exchange.
Talking of the Capital Markets Authority that you just alluded to, we saw the regulator issuing granting approval to UAP to raise a 2 billion shillings bond in June. What is the purpose of raising these funds?
The rationale of raising that fund is to help us with the operation of the business. As you know, we have entered into new markets. We entered Tanzania in 2013. We've also entered Rwanda in 2012. And these businesses are growing pretty fast. We've seen very good opportunity for continuing to enhance those businesses in those markets. So we'd like to deploy additional capital to support those two businesses, including our existing businesses, to make them stronger. We also have projects that we're carrying out on the real estate side. So we'd like to be able to fund those projects, including taking advantage of opportunities of actually expanding our business into new markets. So there's a market which we're looking into, which we hope to enter before the end of the year.
Now, Dominic, talking of the new markets that you ventured into, and you've just mentioned some of them, I would like to particularly focus on Rwanda. And for me, the interest that I have is the real estate project that you just announced recently. Give us some more details on the real estate plan that you have for Rwanda, and also why you're venturing more aggressively into Rwanda.
So in the case of Rwanda, having entered through our general insurance business, we are reviewing opportunity to start life insurance operation, but we also saw an opportunity to do real estate. So we got a very, very good site, which we bought in the course of last year. And right now we've already developed, the process of developing a scheme. Now the site will be a mixed-use commercial development. And the mixed use will be doing retail development, one of the largest in Rwanda, including hospitality, a combination of either 3-4-star hotel development or furnished apartments. Still in the early phase, and the intention of doing those development is to contribute to the demand in the market, and of course make sure that we have a very strongly anchored investment in Rwanda market that will support our insurance business.
Two things I want to follow up from that answer that you've just given us with regards to Rwanda, and I want to find out what is the capital expenditure that you have for Rwanda?
Real estate projects, we estimate is about $50 million project, of which our equity contribution will be about $25 million, which will be seeking those funds, both internally generated funds as a group, and also from the money that we'll be raising from the capital markets. Of course, the balance of the funding will be deployed through different financing by banks.
The other question, Dominic, is that you've said that you've gained a lot of traction in Rwanda when it comes to the insurance side of the business. Maybe you can give us an indication in these other 6 markets that you operate, how is insurance penetration, and also compare it to Kenya?
So we currently operate in 6 markets. That's Kenya, Uganda, Tanzania, South Sudan, Rwanda, and DRC. Now, insurance penetration in most of sub-Saharan African markets is actually very low. In fact, it's less than 2%. Now, Kenya penetration is about 2 to 3%, which is actually much higher in the region. If you look at a country like Rwanda, the penetration will be much lower. So, in view of the low penetration, our view has been that that provides, good opportunity for growth of insurance business, That's why we've deployed resources and capital in those markets.
Now, we've spoken a lot about some of the plans that you have in store. Is there something else that you can tell us that you plan to do, maybe on the expansion front, new markets, acquisitions? What else is in store?
We're looking at various opportunities. There's some markets in southern parts of Africa which we find attractive, in the western part of Africa, including the wider East and Central Africa. And the intention is that in the next few years, I think we should enter a few more markets. Now, in the southern part of Africa, we see very good, very good opportunities in markets like Mozambique, Zambia, Angola. We see very good opportunities in markets in the wider East and Central Africa, including Ethiopia. We also see very good opportunities in markets such as Ghana and Nigeria. Now, the timing of going into these markets is going to be informed by a couple of things. One is the level of preparedness that we have, and secondly, the opportunity. Because our entry strategy into this market is either we go through a greenfield or we make an acquisition.